Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over just that sideways action that just continues to go just up and down as we head into the FOMC, that Federal Reserve meeting. And guys, today at the 2 p.m. Eastern Standard Time, we should get the interest rate information. Of course, the majority of the market does suggest that it's going to be 25 basis points. So what we're really looking to see is what do they say during the statements? Are they going to say there's going to be more rate hikes later in the year? Probably we're going to dump. Are they going to say that they're suspending future rate hikes and that they're probably going to pause? In that case, then maybe we could pump. Either way, 86% is suggesting 25 basis points. So if it's just 25 basis points and we don't really get any clear answers otherwise, then probably we do have just a little bit more to dip in the charts because 13% don't believe in any hike. So that suggests that the market could come down a bit. Let's just jump straight over to the Bitcoin chart, and you can see that we are getting a little bit of a front run bounce off of this little trend line that we have here. So we continue to make higher lows, and this was nothing to sneeze at. It was almost a solid 75 uh, basis points there. Guys, we are bouncing off the 6-hour volatility pivot, which currently stands at $28,060. Now, we still have this play to the upside as a possible move where we retest our highs on this range, perhaps that 29,000 or even 30,000 to see if we can flip that area into support and continue to push through to challenge 31, maybe 32. But of course, yesterday we were blocked by the daily, which had its volatility pivot over its head. So we'll check that out. So, of course, the 6-hour has been doing its job. It's been pumping up. It's pumping up again. But yesterday it was blocked by the daily that had that volatility really high. Now, guys, you can see that the bears are starting to creep up very quickly. And so the bearish control zone is under 27,820 now. And so we really don't want to lose that kind of $28,000 level here. It's probably going to put bears into control. And then we're going to check out that 27 to 26.5 kind of a region underneath us next. If not just our recent lows here at 27.3-ish. Guys, we can see that the neutral point of control is above 28.7 essentially. So if we're able to flip that area, that's going to give us our best chance. You can also see the Bollinger Band midline is at that same location. So for the 6-hour, that's pretty confluent with that neutral point of control. Flip that, and again, like bulls will have a little bit more of an edge. Nothing really more to say about the 6-hour, except that this play is still, in progress, and you can see that, what we got off of this play. It's essentially the same setup, just a little bit less extreme, a little bit less intense, and so we're getting that kind of W formation. And if the day doesn't block us this time, then maybe we can try to go for it again. Of course, we do have the supply line, so if we get blocked around 29. K once again, then don't be too surprised. Just the daily has been pretty frustrating. Okay, but the 6-hour has been our friend if you're a bull. Guys, gonna just go ahead and turn off the 6-hour here. Let's go ahead and throw on the daily. Jump over to the daily chart. And you can see that things are pointed just a little bit more down on the daily. You can see that we are still pretty significantly under that Bollinger Band midline. If I throw some EMAs on, it looks like we started to squeeze to the downside, just what I was suggesting in yesterday's episode. And so, again, we do have to watch out for the daily. You can see that the daily volatility pivot is here at 28,934, and that we are underneath the momentum pool. So underneath the momentum pool, underneath the volatility pivot, I cannot be bullish on the daily chart. So really, we do need to flip that $29,000 area for me to have these kind of midterm kind of a bullish perspective. Otherwise, I'm a little bit biased to the downside until we get over 29, just because the day is so good at slapping us down. And again, let me zoom out here so that you guys can see what I'm talking about. In the past, we did have this kind of similar structure right here, where let's just imagine this together. You can see that we have this kind of run up, this kind of shoulder. Let's just call this, I don't know, one head, right? And then a dip. And then we had a second head. And then we had another shoulder, right? Run up, shoulder. Just call this like one head, kind of a dip, a run up, and a second head. And are we making that second shoulder, which, this was right under that Bollinger Band, midline as well. Okay, so we're pretty much in the same area. And then what happened after that? Little bit of a capitulation on the charts. Could we see a little bit of capitulation down to the bearish control zone on the day, which is located at 26,400-ish? Yeah, retesting these lows down here, but we could also come down further and retest, like a 25 to 24, 23. This area is all in play. There is some liquidity to be grabbed to the downside, and then we're gonna have to go from there to see, where we get some support. Okay. So on the day, you can see that we do have the 200 EMA and also the 200 SMA in that area. It acted as support before. Maybe it'll act as support again. Currently coming in the SMA at approximately 22,000 and the EMA approximately 24.5. So that's kind of the floor that I'm looking for on the daily, should we just break through our current setup here. Now that again, we have that bounce setup on the 6 hour, so there is the possibility for a little bit of a surprise that we just go like this. Somehow we end up flipping that area, pushing up, and then maybe we get hard rejected. Okay, one last go before we break down, because this pattern doesn't have to play out perfectly, right? We're in a different area. We have this resistance here, so maybe 32 400 is probably a hard limit. If not that, then somewhere up here, 34 to 35, where you can see a lot of kind of midline areas. Maybe we just got smacked down. But yeah, I'm just looking that the markets may interpret this FOMC, these Fed meetings, in different ways. And so just because we have a spike up initially, don't forget that we could have just a spike down after that as the market absorbs the news over the coming days. Maybe they think it's bad, whatever was said, or maybe you know what I mean. There's some whipsaw action that could be possible. Because, for example, let's just say that they increase it 25 basis points. Okay, that's what the market is expecting. And so maybe the market's kind of rally, like, they're glad that, it's just as expected. But then, the market hints, or the Fed hints that, they could have more increases in the future. Then after the initial rally, which is just kind of playing out what's on the chart, then maybe the market just absorbs, oh, well, more increases in the future is not going to be good, right? Or perhaps the market just says, well, 25 basis points is just what we expected, but then the Fed comes out and says, and by the way, we're pausing, and then we get this kind of crazy spike to like 35 or something, okay? Because the markets are just like, oh, there's not going to be any more increases. But then later on, the market could say, well, why are they pausing? Like, why are they pausing? Is that because the economy is in such bad shape? And so it might come back down again as the market tries to negotiate what does that policy change really mean in the context of what's actually happening. Because, raising 25 basis points into a banking crisis could end up having more banks fail. That could drag the market down. You know, it, it may be indicating that the recession is stronger. And so, again, we're ping-ponging back and forth between these recession and inflation narratives. And again, we're just stuck in stagflation. So just be very careful with your positions. And by the way, I'm not suggesting it will get up to 35. I'm just saying, that's also a target. Okay, we have wicks up here, then we have this whole range right here, right? So basically, you can see that's kind of the midline on this little area here. Got kind of a brick there, kind of a brick here. Same thing here. Got like a brick up here, brick down here. And should we be able to break up above, 32, let's say 32.4-ish, right? Well, we'd already be halfway through this one, halfway through this brick. So why wouldn't we take out the rest of that brick, you know? And so just because this one is limited at 32.4, it doesn't mean that this move is limited to 32.4. It could push up higher, right? And then maybe it's the weight of this part of the chart that ends up being the true blocker for us. So um, these are just things that I'm thinking about. Not really sure. We don't know exactly how this is going to go, but I can suggest that if we tag that area and the market hasn't fully absorbed what it's doing, then the pullback could be pretty strong. We could get pulled back to that 30, and then we test it as support, okay? And then if we hold that 30K as support, then we're going to have to contend with the fact that we're in basically, the upper half of this market again, okay? Like we're going to be in that bull market zone, and I think people cannot say that we're in a bear market anymore, if we basically flip 30, like I don't know how they could say that we're in a bear market anymore. We're going to be in this kind of like real bull run territory. And then, just how much enthusiasm can we bring up, in the current economic environment, maybe 42, 35 modestly, 42, maybe, 48, and then, some god spike to 55, 60. I mean, that would be incredible, but, it'd be pretty ambitious. You know what I'm saying? Before we have some type of a pullback, um, which could just take us back to 30. It could take us back to 25, and then we just, keep chopping this out. We just kind of hold this kind of area as kind of a range. Uh, nobody knows for sure what's going to happen, but guys, we do have to just be open-minded to all of this and not be perma bears or perma bulls. If we do break down, and if this is a little bit more catastrophic, say it goes down to 21, right? Something like that. Then, this might be our range for a while, okay? Like we might be just stuck down here for a while, and it could take a long time to break out of that. So, I don't think that June, is going to necessarily be good for the charts. Just we got that kind of debt limit and all those things going on. So I think if we have a run, it has to happen this month. Probably some type of shenanigans are going to go on in the market at the end of May, just because of all of that debt ceiling limits on the U.S., where the U.S. could run out of funding as of like June 1st. And typically speaking, whenever we have a debt limit issue in the US, that does send the markets lower. So, in my opinion, you know, it's May. It's do or die time in May. Like do it now, get that spike, see how far we can go, And then when the last week of May comes around, first week of June, just hold on to your hats or expect something to dump pretty hard, because there could be some brinkmanship between Biden and uh, House Leader McCarthy in terms of negotiating the debt limits and then having to get their full parties to back whatever policies are going to be made. And there are going to have to be some pretty hefty cuts. I mean, everyone is going to feel pretty burned by whatever happens, including a lot of Republican states. And so there's going to be a lot of Republicans who are going to be very angry about whatever the negotiation is. It's not just going to be the liberals not getting their money, or whatever the stereotype is. But if we're really headed into a recession, then a lot of Republican, you know, proper statesmen, right? Like you know, proper leaders are going to be concerned about their people, not just, the abstraction of all these dollars. And so, I said it like a year ago, or more. It's been quite a bear market. But what we really needed was the Republicans to have the Congress when Biden came into office. We needed those cuts back when inflation was really hot. Okay, like really hot. We needed those cuts. But now that recession is in place, that's actually when you need, some liquidity to keep things moving. And so once again, the US did it backwards. All right, once again, we did it backwards, guys. Like, I don't know what's wrong with our population that we always vote, in the most backwards way possible for what we need at the time, and yet somehow this country, continues to thrive. But man, if you're having inflation, you want the cutters, you want the guys, you either want to increase taxes because it brings money back in, okay? That's going to stop inflation. Or you want, the guys who are going to decrease spending because that's also going to cut inflation. And, when you have a recession looming, then you want people who aren't going to be cutting critical infrastructure and, services that keep people from being impoverished. And this is a very real issue that we're going to probably be facing in the next year or so. So, you know, it probably just means that we're going to end up spending more later on. And, so it goes. So goes the cycle, guys. Just kind of waxing philosophical there. Probably should end it. Guys, you know the key levels that we're looking for. And that's your alpha for the day. Stay safe and happy trading.